Time for a quick market review, just like we do every single week, to check out what the market is doing and whether we should be worried about it falling. Because we know the number one rule in investing is risk management. That's how you're successful long term. And the hottest thing happening right now is inflation. So that's what we're going to talk about first. And as always, this research is coming straight from MacroOps, which is our global macro research and consulting firm. So core US inflation has risen at an 8.3% annualized clip over the last 3 months. So that's the fastest pace since 1982, according to Bank of America, which is nuts. Now, as far as predicting what inflation is going to do over the next year, it's a pretty tough job. A lot of factors at play. So in our case, we're more interested in understanding where the consensus narrative is shifting relative to the probable distribution of outcomes. What does that mean? Well, it means that we're not as interested in what's actually happening with inflation versus what people think is happening. It's the concept of playing the player, which you always have to do if you're in the stock market. Because at the end of the day, these numbers by themselves don't mean anything. It's how everyone else is reacting to them. And that goes for stock prices too, even fundamental data like the earnings of a company. Who cares? Only thing that matters is what investors think about it. So in a sense, that's a much easier job, right, than predicting inflation or predicting earnings. You rather just look at the other players in the market. So for us, there's more edge in fading the herd versus predicting something as complex as the general price trends of nearly all goods and services 12 months out. Who can do that? And that's why, our Fallible strategy works the same way. It's a systematic quant momentum strategy where we have this TSI scanner that basically ranks every stock by their momentum reading, which is here. And every month we rotate into the top 5 highest momentum stocks. That's how we make sure that our money is moving up, like at all times, or at least we try to. Now, like I said, it's a quant system. We're doing it based off the numbers, right? That means I couldn't tell you why these stocks are moving up from a fundamental perspective. And I don't need to, because if you even think about momentum, what are you doing? You're buying in when the rest of the crowd is pushing the price up. So regardless of why they're pushing it up, doesn't matter. You still benefit off of playing those players. So same thing here. Are we going to try to predict inflation 12 months out? No, we rather just play off the consensus narrative that forms. Now in MacroOps, we take more of a contrarian approach. So if everyone thinks one thing, we go the opposite. But obviously in our Fallible momentum system, we jump in with the crowd. Whether the trend makes sense or not doesn't really matter, because if it's going up, it's going up. You make money. And of course, there's more nuance to it than just that. You got to have stellar trade management to make it work. But you see, even though both strategies do the opposite, they still play the player. So that's definitely something to think about when you look at your own strategy. It's really playing the markets at a higher level. So regardless of what's happening with inflation, we think that the trend in large companies significantly raising their minimum wages is important. We're coming off secular lows in the lower end wage share of GDP. Meaning, if you look at these charts, you could see wealth inequality in the US has been on the rise for a long time. This blue line is the top 1% share in pre-tax national income. So rich people, their money keeps growing, while the bottom 50%, their share in pre-tax national income continued to sink. So this is a stat that we mentioned just before, the wage share in GDP. It's been in a 40-year decline. So this blue line is the compensation of employees, where this yellow line is US corporate profits. They're going up, but people are getting paid less from a percentage basis. And inequality is bad news for any society. And we've talked about this a lot. We've gone back to Ray Dalio's research, and he has the best research on this in the game. Every civilization ended up getting torn apart because wealth inequality. It's always a huge flag that things aren't going in the right direction. So that's why when we see things like Biden talking about changing the long-term capital gains rate, and we see taxes going up for people who make over a certain amount. And it's funny because if you ask the people making over that certain amount whether they feel rich or not, they're of course going to say no. I'm barely making it with this $200,000 salary or whatever it is. So of course they're going to be mad with higher taxes, but what's the alternative? Continue to increase the inequality gap? That's not going to work either. So it's tough, but it's reality. Our political landscape has shifted materially in the direction of us not resuming the march towards greater inequality. So that's a good thing. And speaking of inflation, the market right now is too overweight the transitory narrative, which means that the high inflation that we're experiencing will revert back to trend after the bottlenecks are resolved, because we had a lot of those from COVID. But what's more probable is the transient outcome, where the data only slowly converges back towards the trend and at a slightly higher level. So basically the market is thinking, yeah, we have high inflation, but it's going to rebound back to trend, because we're going to get all these things figured out, like the bottlenecks. But what's more likely to happen is that we slowly go back to that trend, so higher inflation for a while, and that the average that we come to will be actually higher than the previous average. So you can expect that we're going to continue to see inflation. Now, if we look at markets, you can see they're slowly marching higher. Here's the NASDAQ right here, hitting a resistance as we speak. Whether it breaks through or not, we'll have to see. The trend is still fragile, as we talked about for all these past weeks, but the most likely outcome is that the market launches past this point. You can see in the S&P, it's slightly up to mostly sideways. But again, the path of least resistance is up. Now, I personally don't think this summer is going to be that exciting in the markets. I think people are burnt out and they're ready to go outside. Things are pretty much back to normal, or they feel like it. So I could see it being a really slow summer. And I could tell you from our own YouTube channel right here, and Just Breathe, who's a lot bigger than our YouTube channel, Minority Mindset, and a few other people that I talk to in different areas of this business. As I've told you for the last month, traffic is really down. And I tell you about this just to give you another data point of what people are thinking in the market. Because again, we want to play the player, right? So for the last year, it's been crazy. Everyone jumped into the market. And when you see your views and traffic on websites and everything spike, that's another signal saying that more and more people are coming. Now we're seeing the opposite happen. So it's almost like a reversion to the mean, which means that markets may become a little more calm, and or they might become very choppy because we are overextended, at least in the short to medium term. So we could see some more volatility and also a lack of participation. We'll see what happens this summer, but I'm thinking that markets will pick up again in September, as they usually do. That's the normal cycle, right? It was different last year though because of what happened with COVID. The summer was crazy in the markets. And I was just talking to my buddy Edward the other day, really smart trader. And we were just talking about how these markets, the same cycles happen over and over again. But it's so difficult for people to understand them because they're so long term. So all the people that came into the market recently, and we've talked about this before, they don't really have a respect for the market. Edward said it was just like Game of Thrones when they would tell the younger people, like, you're a child of summer, the long summer. You've never seen a winter because, their summers last years and their winters last years. That's kind of how it is for a lot of traders who got into the markets recently. And when I say recently, I mean in the past few years. So they don't really know what can happen. And at the end of the day, the markets always reset. So all the craziness that we're experiencing right now, and not just in stocks, but in crypto and NFTs, everything, it all eventually resets. But the longer it goes on, the easier it is to forget that. So I know people get annoyed with this channel because I'm always bringing it up and no one wants to hear it because it's not fun, but it's the reality of markets. And that's why I always talk about approaching this from a long-term perspective, because you're not just trying to play for the next 5 years. You're trying to play for the next 30. So do you have a strategy that is robust enough to survive any type of market environment? And that's not just overly fitted to the market that we have right now. It's tough though as humans because we just don't do well with time, long time frames. We just can't think like that, or it's difficult to. So that's why we just constantly remind everyone about risk management on this channel and solid trading principles that have worked forever, that all the new traders will say, oh, those are useless. This is a different market now. Everything's different. It's not. Humans don't change. This was floating around on Twitter last week talking about how nothing is new. Back in 1998, this was the cover of Forbes. A bunch of kids are tormenting Wall Street. High-tech renegades score big bucks by making their own NASDAQ markets. And is this really any different than what's happening now? No. Sure, the technology is different, but slightly. It's still technology. These cycles play out again and again and again. So don't get caught out over your skis. Don't get caught doing something stupid. Just like I see in the housing market right now, a lot of people are doing some stupid stuff. But again, tough to remember when things are just crazy. Everything's going up. But the trick is that you never know when the music stops. So you got to be prepared at all times. But anyway, if you want to use the same strategy that I use and all our Fallible members use, make sure you check out our free training right here. I'll put a link in this video and down below in the description and comments. It'll teach you exactly how to use our strategy so you can start using it right away. That training is going to be right here. You could click right here. And this strategy is all about risk control. It has all those solid trading principles that are going to work year after year. And they have worked and they'll continue to work. So click here to jump into the training for that strategy, and I will see you there.